What a week that was indeed. Last week was a crazy one for volatility. I'm personally glad it's out the way. I'm sure you are too. What is going on, everyone? Happy Sunday. Time to get into it. Last week was definitely a crazy one. We're going to get into that shortly on the charts. Dollar remains firm. Dollar is king in these markets. Risk is off across the board, whether you're in equities, commodities, cryptos, everything is in the red. I'm here to break that down and what I'm looking out for next week and the madness behind the yen pairs. I'm sure you saw my video yesterday. Such a crazy one for the yen, regardless of where we want price to go. It is being stubborn. So we're going to jump straight into the charts and let's go from there. Right, welcome back. Dollar, as you know, the forefront of my analysis every day, every week. I want to know where dollar is, what it's doing, the fundamentals behind it, how we can trade it. So dollar remains firm. Looking at this on the daily and the weekly, let's start on the weekly. The weekly close relatively indecisive in my opinion with the wick into the high. Let's zoom in. With the wick into the high, a wick into the low. It's not about what it is, it's about where it is. We still had a firm weekly closure above 113. We know 113 is a major level, round psychological level for the pair. In terms of the daily time frame, we had a bit of let's just call it a bit of ruckus on Thursday with the CPI print. CPI print came in as expected. We know that should send dollar higher. We had, and I'll show you this on the 2 hour and the 1 hour, we had a bit of a manipulative play, in my opinion, purely because of the Bank of England and the UK government. God knows what's going on there, but they obviously can't get their shit together, and that obviously has caused some ruckus in the markets. 1 minute they're doing a tax cut, the next minute they're doing a tax hike, and that has sent and put a lot of pressure on the UK pension funds. When the Bank of England announced some assistance, they said that it's going to be temporary, and the pension funds pretty much need to sort their shit out. I'll get to that in a second, but looking at dollar, we had that initial rally on the dollar and an immediate sell-off thereafter once the UK announced a U-turn on their tax cuts. The UK Chancellor Kwarteng got sacked, and there has been a replacement since. But I personally think the current government don't know anything. They don't know what they're doing. Like, it's basic economics. If you can simply read a book, but clearly they probably can't even read. Hunt, I don't trust him either. Right? I don't think he's going to do a good job either. But let's not get into politics too much. Let's focus on where we currently are. So dollar on Thursday had that bit of a ruckus, right? But we've had that continuation nicely into the close on Friday. Now, this was off the back of Fed member Daly announcing on Friday that the Federal Reserve has no chance of stopping right now with their rate hikes, and they are going to be looking at possibly pausing around the 4.75 mark, which, friends, is still 175 basis points from where we are. If they do go ahead and hike as expected, 150 basis points, excuse me. If they do go ahead and hike by 75 basis points in November, the 2nd of November, that's going to take their rates to 4%. That means they still have about 50 to 75 basis points to play with before the end of the year, possibly into early next year. Now, that being said, that's put a lot of pressure on global markets. UK pension funds being one of them. UK pension funds are estimated at £1.6 trillion. And that was at risk not so long ago due to the tax cuts. And that caused a sell-off in the pound, which caused a rally in yields, which they were not expected. Right? They were not expecting that at all. So major ruckus in the markets. But does that change the overall narrative? No. We understand dollar remains super firm. We had the inflation release coming out at 8.3, showing that inflation is still strong, still there, still persistent. And yeah, we're going to have to see what happens. Please note the Federal Reserve have announced that they are possibly going to pause once they get their nominal rate to anywhere between 4.5 to 4.75 to see how the market reacts. They currently abide by something called the reaction function, which simply means they'll react on data and no longer forward guide how they used to. So it'll be interesting to see how markets react. But that being said, equities on Friday had a nice little sell-off. Dow Jones back below 30,000. The S&P 500 straight into a key area of interest of mine, which I broke down in my live London session. Straight into our little fib area. Straight into a previous area of importance. It's not about what it is, it's about where it is. Something where it is holds a lot more relevance because it shows us how it's reacted in the past. And if we keep the narrative in mind, it's a free trade. It honestly is a free trade. So a beautiful little sell-off on that. GBP USD, there again, a bit of a tricky one yesterday. On Thursday, I got stopped out on my short. I went in again on Friday. It was too clean not to enter this. There were rumors early Friday morning that UK Chancellor Kwarteng was going to get sacked. But I thought, you know what? It all depends on how the markets react. So I had a bit of a small short position there again. It ran in line with my analysis. It ran in line with dollar higher, risk off. That's all I care about. As long as I know where dollar is, I don't need anything else. If that is the plan and that's the narrative, you want to trade that narrative, not where you want things to go. I learned that this week for myself with the yen pairs. Euro yen stopped me out. We're going to get to that in a second on, you know, you got to trade where something is, not where you want it to go. So cable for myself, I still see fresh lows on cable. Depending on what the Bank of England do, there is rumors that we could look for an emergency hike from the Bank of England. If that does happen, we may have these little relief rallies in cable, but I personally still see it trading lower. In terms of relative value, if you have to match the pound versus the dollar, dollar still is stronger. All the nonsense here in the UK, who really wants to buy a pound, right? So any little relief rally that we have in the pound is shorting opportunities for us to the downside. In terms of euro came just shy of my area of interest that I did draw out there. So I do expect this to more than likely head lower. Looking at the weekly, looking at the daily, you know, price remains bearish in my opinion. I'm expecting a revisit of 96, but there again, right now, as I've mentioned, it is a tug of war between central banks. Rumor has it the ECB are looking at raising rates and taking rates well above 1%, which I personally don't think the European Union can afford that at all. The European Union is very debt reliant, and if you raise the cost of that debt, you have a problem. And most of those countries, in my opinion, would default. Germany right now witnessing a very, very big slowdown in growth due to the energy prices, but that's a global narrative and global problem right now. So euro, any little relief rally that we have, in my opinion, is a short on euro dollar. Aussie, same thing. Aussie dead out the water. We've seen growth in China absolutely slow down. There again, we know Australia relies heavily on China. Any little bad data, we had the Caixin PMI is coming out, or Caixin, however you want to say it. PMI is coming out earlier this week. Very, very bad, putting a lot of pressure on the Aussie over there. In terms of the yen pairs, I'm sure you saw my video yesterday on the yen pairs. Yen pairs still screaming higher. Euro yen for myself. I was short early on this week, which took me out, unfortunately. But there again, lesson learned on this one. We got to trade where something is, not where we want it to go. For a while, this pair did float nicely over there into profit, but we had that immediate rally. Several things going on with this was the ECB announcing that they're going to continue to raise rates, and you know the dollar yen just keeps screaming higher. This is because, in case you didn't watch my video yesterday, the Japanese 10-year yield was at its upper band of 25 basis points again. Every time the 10-year Japanese yield comes to this level, the Bank of Japan have to buy Japanese government bond, JGBs. So there again, looking at global yields screaming higher, that's putting a lot of pressure, dragging the 10-year Japanese yield with it. So my only concern is I feel the yen pairs will top out only when, right? Only when the Federal Reserve slow down, possibly January, right? January, February. So that being said, I am a bit cautious around the yen pairs. I do think dollar yen will ease off a little bit, possibly back into 145. But I'm only really interested in a short once the Federal Reserve possibly slow down on their policy. So in terms of cryptos, Bitcoin, back at this 19K handle once again. Yeah, for myself, I'm pretty tired of this level of support. I'm sure you are too. So I'm looking for this thing to break. My target on Bitcoin overall is 15K. With the Federal Reserve continuing to raise rates, risk assets are going to be on the back foot. And I think it's about time that Bitcoin breaks this level of support. Once this level of support breaks, do please be advised that there will be a capitulation across the board. Bitcoin is mainly an index for myself. I treat that as the index. I thought I dropped my mic there. I treat that as the index. So any little move in Bitcoin reflects the overall market. You got Ethereum down 1.3%, XRP same thing. XRP hopefully back into 35 cents to start loading up on that one. Yeah, Ethereum back to 1,000, Bitcoin 15K. And yeah, for myself, as I've just said, I remain a dollar bull, risk off, completely off. Looking at gold, gold's had this rally obviously into 1725, a key area of interest, right? Look at my key levels. I know there's a lot of lines on this chart, but for gold, I love it. I love it because it's so easy, right? Straight into 1725, nice little Fibonacci on that one as well. I still see this back at 1600, right? 1600, 1550, right? Possibly before the end of the year. 1550 would be great. Yeah, it's a big move down. It's 1,000 pips from where we are, but 1,000 pips for gold is no issue, right? Looking at oil, $85 a barrel. There again, I expected a bit of a relief back into 91, right? We didn't get that because I want to short oil, right? If we had that relief back into 91, it would have been a great short. We didn't have that, unfortunately. OPEC announced that they're going to be cutting the daily supply by 2 million barrels a day. So we obviously had that initial relief rally. But yeah, for myself, as you know, if you don't, how I trade is I want the reversal first, get the correction before the continuation in that overall direction. So we may still get that relief rally on oil. Any relief rally on oil, I want to sell, right? I want to sell. Silver, same thing. I spoke about silver this week in my live London sessions. Any little relief rally that you get, stop trying to buy it. Stop trying to buy it, just short the rallies. But that's pretty much it from me, everyone. I hope you all enjoyed today's video. Do trade safe this week. Volatility will be wild. There is still 2 full weeks of October, so don't rush. There is adequate time to capitalize on the moves. But I hope you all enjoyed today's video. Good luck for market open, and I'll see you on the next video. Take care. Bye-bye. Thanks.